Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar surges to a fresh 9-month high on Tuesday after the Reserve Bank of Australia kept its interest rates unchanged at 4.35% and along with that maintained a hawkish stance. The RBA stressed that the importance of keeping policy tight to control inflation rattled the market a little bit to a bullish bias and therefore looks further to the topside target around 69 cents and with the call maybe extending on to 70 cents. Broader markets are now factoring in a slight possibility of a rate cut in November with over 50% chance of a rate cut in December. Looking ahead though to this week as well, we've got the Fed's preferred inflation measure, the Personal Consumption Expenditures Price Index, or the PCE, and also a series of Federal Reserve officials appearing. So no doubt it will keep the market relatively busy, and therefore keeping an eye on the Australian dollar, the market is likely to remain bullish. With any pullback, bargain hunters are expected to return around the region of 67, 80, 85 and reassess from there. The euro was weaker overnight as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied from 100.45 to 100.90, following a 15-month low in August US PMI manufacturing activity. Still, there's much more to come, and no doubt the market will remain volatile, and any weakness continuing should find support around the region of 110, 20, 30. Overall, I'm bullish and do find this weakness likely to be snapped up from bargain hunters and eventually look for a move on to the top side of 112, figure 15. With that being said though, the upside level still presents significant risk as we do need to see a break there to support the rally on to 113.45 to 55. The dollar yen, well, the market's still maintaining a slightly bullish bias as it re-challenges the 144 and now looking on towards the region of 144.5. Any weakness should find the support around 142.80. The sterling continues to put a stellar performance in as the market rallies on and refreshes its highs around March 2022. Looking into the technicals though, we are a little bit overbought, so therefore we may see a pullback into the European session and therefore look towards the region of 132.65. But overall, I still anticipate a bullish bias and looking on towards 135 to 136 as initial call. The market still finds bullish momentum in gold and not pulling back after posting an intraday high at 2,639. In light of the pattern, there's still a little bit more room to the upside that could see a move to 2,650 to 2,670. With any weakness, should find support around 2,620 to 25. Wrapping up with oil, the market still maintains its upside target, which is seen at $72 a barrel. With any weakness, well, I feel this outside or engulfing candle is likely to be negated due to the fact the technicals are still somewhat strong and therefore should push higher. And as I say, look towards $72. With any pullback, still seeing support around $70 or maybe around 69 as initial short-term base. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report and I hope you enjoy the great start to the day.